Banks in Kenya are quickly turning to sharing of infrastructure as an avenue of choice to cutting operating costs and increasing revenue from non-competitive payment structures like ATMs and point-of-sale terminals.
In the industry, we have got two issues that we're trying to address currently. One is extending our services to the unbanked and the underbanked members of the Kenyan society, and to bring down the cost of banking services. And the push by banks to share infrastructure is actually in order to achieve the two objectives. One is that for them to be able to access the services to the unaccessed members of the community right now, they need to share the infrastructure so that they can bring the cost of accessing those services down to the minimum. And so banks are finding it easier to access the rural areas through sharing of infrastructure.
And some places you go to now, you see rows of ATMs, and you wonder, do we really need all this infrastructure? And what's happening with the cost? Because the cost goes somewhere, and ultimately it goes back onto the consumer price. So I think the industry has been looking at how do we become more efficient? And that means we need to take that infrastructure like an ATM and make it accessible to a far wider range of people. And that's what the interconnect's about. So now we're taking the PesaPoint logo that people understand, all the consumers understand, and they see PesaPoint, I can go there and access my cash. And we take that logo and we don't just use it on our own ATMs, but we put it onto another bank ATM. And so where the PesaPoint consumer sees that logo, they know they can go to that ATM and draw cash in the same way at the same price. So our footprint has gone from 110 locations of PesaPoint to now over 650 locations as we've done this shared infrastructure, and that's what the interconnect's about.
Uniqueness of the universal teller machines like PesaPoint is that they are not restricted to just performing bank transactions, but can also be used in other industries. This versatility makes the service lucrative for the end users.
PesaPoint's a very innovative entity, and therefore if you go to our ATMs, we do everything off those ATMs. You can pay something like 30 different billers. You can use your M-Pesa phone and draw cash without having a card. You can use your Airtel Money phone to do the same thing. You can buy airtime from every single one of the airtime companies, the mobile companies, and of course you have access to cash at 31 different institutions. So there's a lot that we do. And one of the things we're working on hard with our bank partners is to offer them some of those services so that all ATMs in Kenya have a rich set of functionality. And at the moment, I don't think that it's not as if everybody has the same level. And I think that's what we'll see emerge over the next couple of years.
But how affordable is this option for the institutions and consumers?
Transaction fees is an issue, but I think you have to look at the reason that they're high and perceived as high, because I think a lot of people don't actually know what their fees are, and I'm not being unfair, it's just research just showing that. So they have a perception of expense, but they don't really know what it is. But I think the reason is that if you look at how PesaPoint have done it, we've placed our ATMs away from other bank branches, etc., into locations where we know that there are consumers and there are very few other points of presence. And to do that, we don't have the luxury of connecting back into a bank branch like some of the banks do, and they're having their staff, for example, putting money into their ATM. We have to get a CRT company to do that. So there are some costs associated with having a very wide network. But I think on the cost side, what we've been able to do is keep the cost static, and we know that we're running in an inflationary environment. So effectively the costs are for a consumer in relation to income, etc. Hopefully over a period of time they've seen those costs effectively go down.
The increased uptake and diversity in the service offering has prompted support and intervention from the banking industry's umbrella body.
We find there an opportunity for the Kenya Bank Association to come and provide the framework under which banks can then share the infrastructure by providing the guidance in terms of creating the environment for banks to share the infrastructure. So we've been working a little bit on that as an association, and we're trying to consider the issue of bringing in a national switch where the various systems can hook onto a national switch so that the players can share the infrastructure.
Consumers and industry experts welcome the collaborations and feel that the infrastructure sharing initiative is a key component for the deepening of the financial sector.
The way to go is to share the infrastructure platform, because that's the only way you can be able to achieve the economies of scale and effectively bring the per unit cost of transacting lower. And that is really the essence of having the financial inclusion agenda. We want to get our services accessed by as wide a majority of the Kenyan population as possible. And that can only be achieved by bringing the costs down. So any avenue through which you can bring the costs down is most welcome for the industry.
With ATMs from different banks, clients whose local banks are interconnected with the universal ATM systems can transact from one machine at a location of their convenience. Now, these developments are an indication of the increased growth trends in the money payments and transfer systems in the country. For Ion Kenya, I'm Lois Washira.